Financial market volatility is rising as President Trump twists and turns. Should investors expect a soft landing, boom, or bust? President Trump's second term is increasing volatility in financial markets. We think the outlook remains favorable for US assets. The US economy is likely to experience a soft landing as inflation eases. The Federal Reserve should be able to cut interest rates again this year, and US corporates should benefit from sweeping deregulation and fresh tax cuts. But America's outlook has been clouded by the new US government's twists and turns. The Trump administration has already imposed an additional 10% tariff on all Chinese exports and is threatening a further 10% levy to start this month. Canada and Mexico's exports to America are also being threatened with harsh 25% tariffs. And the US government is considering reciprocal tariffs from April on all imports from the rest of the world. The threat of fresh, wide-scale tariffs may hurt business sentiment, weaken consumer confidence, and raise inflation expectations. At the same time, business sentiment may be dented if the Trump administration's crackdowns on immigration tighten the US labor market. And Elon Musk's attempts to downside the federal government by rapidly firing employees may also hurt consumer confidence. Investors should thus expect financial markets to stay volatile while the Trump administration's policies continue to have contrasting effects on growth. Despite the uncertainty about the new US government's moves, we think investors should still favor equities. The prospects of tax cuts and deregulation in the US, further stimulus in China, and greater spending on defense in Europe should benefit risk assets. But investors should stay underweight fixed income and be cautious on duration. The risk of inflation rebounding this year on higher tariffs is likely to lift long-term 10-year US Treasury yields back to their 2023 highs of 5% again. Last, the threat of further US tariffs, the likelihood of the Fed keeping interest rates above 4%, and America's sudden geopolitical shifts are set to keep safe havens, including gold and the dollar, supported. I'm Mansoor Mohiuddin, and this is Bank of Singapore Research.
For more information, please refer to this month's monthly investment guide.